Good afternoon. For the Forum, the CME, this is Chris Robinson with your Traders Exclusive comment for today, Thursday the 13th. One more week till we really get into the throes of pre-Christmas trading. I'm going to talk about one thing today, and it's going to be soybeans. In the last 2 months, soybeans rallied $1. Now the interesting thing is that we peaked out. Today is Thursday. We peaked out Tuesday, Wednesday, on the news that China indeed was going to buy some grain, and the market had anticipated a much bigger sale. So I'm going to talk about that today. The dangers of trading the headlines, right? Everybody, you would have thought soybeans would have skyrocketed higher. A lot of people were looking for a much bigger move, and lo and behold, what happened? We made a new high for the move, which is good. We made a 6-month high, again, $1 off the bottom. And instead of getting any follow through, the market has pulled back. Why did it pull back? Well, basically because people thought they were going to get 8 to 9 million metric tons of beans sold here quickly. In the past 2 days, we have had 2 confirmations of sales. First one was for 500,000 metric tons. The second one's for about 1.2. So we're at 2 million. People were looking for 8 to 9, and the market has moved lower in response to the lack of big sales. So that's a number one thing you've got to watch, especially if you get caught up in watching the headlines. It can cost you a lot of money. Now, if you bought the highs and were 10 lower, that's $500 a contract. It just depends on what your time frame is. But we see that time and time again. It's kind of a buy the rumor, sell the fact. Once that story got out there and we didn't get any follow through, the market's been moving back lower. So I would continue to watch that. We've got another certainly another window of opportunity between now and March, when the deal supposedly is going to be completely done with China, the new trade deal. That's what we've been led to believe. We're on this 90-day time frame. So I would continue, if you're trying to trade reaction to Chinese trade negotiations, positive or negative. I think the canary in the coal mine is soybeans. And I'm just going to finish very quickly with the one final thought. If you look at a chart of soybeans, we got up to a level which a year and a half ago, 2016, 2017, had been big support. So we've come back up to kind of old technical levels. So the market's got to deal with that. The technical levels, number one. And number two, on a supply and demand basis, the United States here, we're sitting on close to 1 billion bushel carryout, 995 million bushels. So it's a lot of bushels sitting in the bin, a lot of supply hanging over the market. So you have that supply issue. You also have, right now in South America, Brazil's done planting their beans, or mostly done. And they've had a good planting season so far, no issues, no weather issues. So you have a very large crop that's been planted down there. So even if we do get the Chinese to come back, we have the danger of a lot of supply hangover, not only here in the U.S., which we know we've got 950 million bushels, sitting in storage, but also we've got the whole new crop coming out of South America. So something to watch. If you're trading soybeans, you've got to be very quick on your feet. Soybeans can move 20, 30, 40 cents in a heartbeat. That's about it. If you're looking for help with your trading or your hedging, look me up online, Chris Robinson.